Hey, everybody, Toby Potter here with Global Trading Finance. Hey, guys, we are here in Dallas today at Leverage Con. Man, amazing turnout. I think I saw on the registry about 500 people from lenders, appraisers, attorneys, anything you need to be able to get into the real estate industry as an investor. Here's the place to be. And if you're not here, well, you're missing out. But the good news is that we've had the distinct honor and privilege to meet with our boy, Matt, with asset-based lending. And we're going to talk about what asset-based lending does, how it can impact and help investors grow and build their book of business. Matt, welcome to the show, buddy.
Thank you, Toby, for having me.
You bet.
Appreciate it.
So tell us about where you guys are at, where you're located,
Okay.
what states you lend in, and tell us about the product and programs.
Okay. ABL, asset-based lending. We're based in Jersey City, New Jersey.
Yeah, we won't hold that against you.
Right across the Hudson from Manhattan.
Yeah.
I'm personally and physically, I live in Chicago.
Oh,
So,
wow, Windy City.
Yes. But Windy City because of the politicians, not the actual physical wind.
Blowing hard, huh?
That's exactly right.
Everybody's blowing hard.
That's exactly right. But so we lend to real estate investors.
Okay.
We help them scale. We start with new investors all the way to experienced.
Okay.
And we specialize in ground-up new construction, fix and flip, DSCR, rental purchases, and refinances.
So you have the whole buffet
Yes.
for
Great.
an investor.
Awesome product suite.
Yep. So tell us a little bit. Let's go into right now. There's kind of a pullback. I'm sure you guys have seen it too in the fix and flip world. Kind of been transitioning to DSCR, but on the fix and flip, what are you guys seeing as a trend of growth, decline, stagnant? Where are you at on that?
I see as of late and this year of 2025, it's steady.
Steady?
So there's still deals out there.
Yep.
Okay. Some people are coming out of the woodwork, mainly newbies.
Yeah. Lots of newbies.
Lots of newbies, which fortunately our company was founded and started and built on helping new investors in the business. So we still do fix and flip for brand new investors, zero experience.
So is that leverage different than from an experienced investor? How does that work? How does that help you guys protect the asset and the money?
So based on a certain credit score, the leverage will adjust. So if they're below between 680 and 700 FICO score, we'll do 80% loan to cost.
Okay.
So 20% skin in the game for them. If they have a FICO score above 700, 85.
85?
Yeah.
Now, if they're below a 680, we're out? Well, if they've got lots of capital.
Yeah. It's on an exception basis.
Okay.
And if there's some mitigating factors.
Yep. So it's not that they have got bad credit, but they're limited and they may be maxed out on some credit cards because...
Yeah. And sometimes a bad credit report isn't necessarily that bad. It's more, it's some, it could be, hey, they were shopping for a car and the dealership accidentally or purposely pulled their credit 10 times. Or they've
30
got
times.
Yeah, exactly.
Yeah.
Or, they've got some utilization. They've got some maxed out credit cards,
Credit cards are
but
maxed
all their
out.
bills are paid on time.
Right. No late pays, no charge-offs. So there's something we can look at.
And then also they might have, maybe $150 medical charge off that pops up 1 month and then their score plummets.
And I do love, so when we got in the business 30 years ago, medical collections was profound and it didn't matter. I went, clients say, well, we just went to the doctor last month and we have a payment plan and I already having a collection.
Yeah.
And so I do love that the government removed that off of credit reports, but every now and then one will pop on there.
Sure.
And it's easy to get removed, but it does affect the credit score.
It can, but again, we might overlook that, or we might say, hey, do you happen to have a payment plan or something that shows that you either satisfied it or that are working? And if they show that, then it's fine.
So that's what we look at on a brand new guy. So now I have an experience, what we call institutional investor who's done 10, 15, 20 deals. Do I get a higher leverage or lower interest rate? What's the difference?
Absolutely. So the more deals you do, whether it's with us or just in general, is going to grant you higher leverage, lower rates and fees.
Okay.
So because we know that they know what they're doing.
Yeah.
And the risk is mitigated.
Yeah. And that's what we try to explain to everybody out there, that it's a risk reward situation. We teach our guys, does it make sense? And everything of that deal has to make sense. The credit score, Does it make sense why it's below a 680? Does it make sense that this property is going to perform like they said or not? You know, are they buying a property that no houses have moved, and why do they think they can sell it at this price, so on and so forth? So we try to do a common sense underwrite. I think you guys are right in that same line.
Absolutely. You hit it on the head. Common sense underwriting.
Common sense underwrite has to be our world.
Yeah.
And it's some of the things after COVID that really kind of set me off was that we got away from the common sense and we got into these grids.
Sure.
You know, we got into, you had to have 3 to 5 deals minimum.
You had to fit into a box.
You had to fit into a box. I'm like, that's not what private lending got started. When it was conceived in 2010, 2011, it was about, does it make sense? Can we make money on this deal together?
Sure.
Me as the bank, you as the flipper investor, can we both grow from this deal? Was the bottom characteristic.
Absolutely. And we want, I say this to all my clients, we will do everything in our power to make you successful.
Yeah.
Because we want you to succeed. We want you to make as much money as you can on that deal because we want you to come back and do another one.
Right.
And then do another one. Or
right.
2 at a time.
Right.
Or 3 at a time.
Yeah, it does.
It's a true partnership.
Yeah, it does you guys no good to do a one and done.
No.
It's so much more beneficial financially, relationship, to do 10 deals, 20 deals, 30 deals, and to get a partner for life.
Yeah.
Right?
Yeah. And what's great too is when a client stays with us or any lender, they build that relationship, they build that trust factor. You'd be surprised at what they can end up doing.
Right.
Meaning the underwriters start to know their work.
Right.
The people in the company know their deal, their process. I don't want to say things just get rubber stamped,
but they get streamlined.
They flow a lot easier through underwriting and through, and then also they can use that as leverage to say, hey, I've done all these deals with you, right? We built a good relationship. I want to do this now.
Right.
And this is not necessarily in your wheelhouse.
I want to step up a level.
Yeah. Can we, we'll get a little creative.
Right.
And because they've earned that trust with us and they've proven that they know what they're doing and they paid us back. So now it's kind of like you can do whatever you want.
Right.
If you've got a funky deal you want to bring to us and try, we'll probably say yes.
And if you can explain to me how you're going to perform and how this deal will work, I probably will believe you because you've shown that you perform.
Absolutely.
Yeah.
Yeah. It's kind of like with a lot of things in life, right?
It's relationship based.
Relationship, trust.
Yep.
You prove your
a track record. And I don't want to say you paid your word, dues, but you've earned the right now to step up.
Earn the right, yeah.
Yeah, you've earned the right. You've performed. So do you work with just individual clients or brokers, or how do you guys work?
Both. So we work direct to client, and then we're very broker friendly. We love brokers. Yeah.
So on your broker side, let's talk about that a little bit because there's a lot of brokers here. This is a broker network.
Sure.
Do the brokers, are they white labeled? Are they how do I not lose my client if I send a deal to you because they could go straight to you?
I get asked that all the time. And honestly, we have a broker package just like everyone else where we sign documents saying, hey, we're not going to solicit your accounts. We're not going to do anything or go behind your back or anything like that. But when you work with me or my LOs direct, that's a relationship too.
Right.
And it's a trust. Why would I jeopardize and steal one of your clients? Bite the hand that feeds me.
Happens.
It does. But why would I jeopardize one deal, one borrower,
lose you for life,
and lose the possible 30 or 40 different people that you are going to send me? But, I don't understand that. We don't work like that.
But Matt, that's common sense. And a lot of our brokers don't resonate that way. Mm-hmm. And I will say that most of them have been burnt. That's why they're concerned.
Which is fair.
Yeah.
And I agree. But again, when they come to me and ask me that, I just tell them I'm not going to do it.
It's in your
trust me. I want this as a true partnership, and I'm just not going to do it.
So back to the question. So are the brokers white labeled, or are they just on the HUD as a?
They are not. They are not. We don't do. At this time, we don't have a white label program. Okay. So if they, charge an origination, it will be on the HUD.
Charge on the HUD.
So,
okay.
But we have a broker incentive program that we offer brokers. If you build a relationship with us and keep sending us deals, then we ABL will pay you yield spread on the back end.
Nice. That
will not be on the HUD.
Right.
It's a check that we write to you, and it doesn't affect the borrower. meaning the borrower is not paying for it
Right.
in rate or in fees.
Right.
It's truly a thank you. Here's a little
and is
a
that
little incentive.
Is that a merit earned
Yeah.
yield spread?
Correct.
Okay.
Yep. Yeah, I think it's I have to check our it's actually we just launched this new broker program about 2 weeks ago.
Okay.
So I think it's like the first 3 deals.
Perfect. Perfect. So what else? So you guys are nationwide?
Yep. I say nationwide. There are like most lenders, I say nationwide, but there are a few states that we do not lend in. But most clients are not doing deals in those states, so it's easier just to say nationwide.
So we do the same thing. I say nationwide, other than Montana, Wyoming, South Dakota, North Dakota, because if there's more cattle and trees than people, I'm out.
Yeah, right. It's same thing. North Dakota, South Dakota.
Yep.
Actually, we don't lend in Hawaii or Alaska. Again, I don't get a lot of deals for that. In Nevada either, we don't lend in Nevada because
it's a brick and mortar.
It's the state law requires you have to have an office or a brick and mortar to lend there, and we just don't do that.
Yeah,
and we haven't decided to cheat the system by opening an office, like a rework office and saying,
exactly.
We just don't do that.
No.
So
because it's just I don't think there's enough volume to support all that. So we looked at it too, and I think, correct me if I'm wrong, you had to have a brick and mortar and you had to have a W-2 employee.
Yeah, correct.
So now I got workman's comp, I got insurance, I got all this. If I'm not doing $2 million a month out of that state,
it's not worth it. No. So we let the lenders that have that's their wheelhouse.
Yep.
Enjoy.
So what are your sweet states? Do you have a specific area that you really like?
Yes. So we started and were founded in New Jersey. So that New England East Coast
Connecticut, all that area.
New York, New Jersey, Connecticut, all the way up to Maine, and then south as well.
Straight down
so
the
like
coast.
Florida, the Carolinas, Georgia, and then just migrates west.
So you guys pretty much
and
started
Texas.
in North. Yeah,
Texas is a great market.
So basically East Coast states, other than California.
Yeah. Oh, but we go all through the Midwest too. But
those are your sweet states. Yeah, coastal states. Nice.
Exactly.
Nice.
And Texas.
Yeah.
Texas is a great
if
market.
you're not in Texas, you're missing millions.
There's so much business here.
Texas is, everybody talks about that we're kind of in a real estate recession. Texas hasn't seen shit.
And that's the thing. Everyone talks about that. It's slowing down or it's a recession. There's deals out there.
There's tons of deals.
There's deals out there. It's just, there's deals.
The problem is, Matt, is that in 2016, 17, 18, 19, you couldn't miss. You could go buy any deal. You could rehab it and sell it and make a profit. I mean, you didn't have to know squat. Now the margins are a little tighter. It's a little thinner. And so people have to work a little harder.
Sure.
And that's the only difference that I'm seeing.
Exactly. Yeah, and I've kind of educated and trying to mentor some of my newbies and some brokers when they complain to me that it's slow.
Yeah.
And they're like, "Oh, there's no deals out there." Oh, there's deals, but you have to kind of go the old school way.
That's right.
Knocking on doors. Finding distressed properties in the market that you want to invest in.
Yeah.
You can't just sit on the couch and scroll the MLS and be like, "I'll take that one."
Yeah, no.
You have to go to the old school measures.
And you got to, and our industry was founded on the driving for dollars philosophy.
Sure.
You're driving neighborhoods, you're looking for tall grass, you're looking for weeds and flower beds, you're looking for mail piled up, and then you're trying to find who owns it and chase them down.
Yeah.
That takes time.
It does.
Energy.
But that's where the deals are. Those are your off-market
deals.
Those
make $50,000 to $100,000.
Yes.
So you spend 6 months, and then you spend another 6 months. You find it. Then it takes 6 months to rehab it. You just made $50,000.
Right. But what you also said, that's work.
It's work.
Well, like anything in this, you have to work for it.
We got spoiled. They got spoiled.
Exactly. Well, and that also weeded out a lot of people too.
Yeah, it did. It weeded out a lot of the people that weren't truly committed to the future. They were only committed to today.
Sure.
It's easy today. I'm in it. I'm, balls to the wall, running and gunning. Oh, now it's a little bit hard. I'm out. This still doesn't work for me anymore.
Right.
So it did weed out all that shit.
Which is okay.
Yeah.
Which is okay because there's still plenty of deals. And if you've got a good product and a good company and, there's relationships there and you stay steady.
Absolutely.
And ABL is that. We have a great product suite. We have a great leadership team. It's we make good loans.
Now, do you guys have branches in other states, or is it just New Jersey?
Just New Jersey.
Just New Jersey.
So, but we've
the hub.
Yeah, that's our main office where we do all of our processing and underwriting. I actually take that back. We have a South Jersey office as well, but everything's in New Jersey.
Right, everything's in New Jersey.
Yeah.
Okay. So how do our listeners come find you guys? Where do they find you, and how do they connect with you, Matt?
Well, I mean, we've got a website, www.ablfunding.com. I'm based in Chicago, but we've got reps in, a lot of states throughout the nation. But you can go to the website, and all of our pictures are there, all of our information. Yeah. But we're around. We attend all these conferences. We're always out and about, planting our flag and getting our name out there.
Making it happen. Hey, everybody, this guy's the real deal. I know these guys. I've butted heads with them for the last 10 years at these shows. They are amazing. They got a great product, great program. Like, share, subscribe. Go look up Matt. Get your funding set up, especially for you newbies. And we say newbies less than 5. In my world, less than 5 is a newbie because you still don't know what you don't know. But this is the guy, when most people will tell you no, this is the guy that will do it. So go find them, hook up, get educated, and make it happen. Thank you for watching.
Thank you.
Thank you, Matt.
Thank you.
Appreciate it.
Appreciate it.